And like the Chinese auto industry executives in Detroit, U.S. companies operating in Asia say the key to success is relying on local talent. Caterpillar has been in China for more than 40 years. I spoke with Caterpillar Group President Ed Rapp about what the President Xi's visit to the United States means for U.S.-China relations.
First of all, we take it as a very positive sign of his willingness to engage globally. You know, we just kind of look at U.S. and China as the twin engines of global growth. And I think the fact that early on in his tenure, he's making it a priority to get here. And I also think we're encouraged by the structure of the debate, an opportunity to build relationships. And because I think it's one of the things that at the foundation of any good partnership is a good relationship.
You can see that the strategy is very much sort of welcoming global companies to China, while at the same time China making investments outside of China around the world. Let's talk about your strategy specifically in China and Asia for Caterpillar.
Yeah, I think the strategy is working. I mean, first of all, we're not newcomers to China. If you look back, you know, we first entered with a sales operation in about 1975. And then gradually since then, you know, we started adding manufacturing facilities or dealer organization. And what we talk about openly today is that we are systematically building out our business model. Our supplier network, our manufacturing capability, expanding our product line, building out our dealer organization, and then a full array of services all the way from logistics, parts, financing. And I think we continue to see progress as we systematically build out that business model in China and the rest of Asia.
As you're building that model, are you working with local partners on the ground? Are these wholly owned by Caterpillar? Or are you doing joint ventures?
Fortunately for us, as I said earlier, we came early. And what that's really allowed us to do is, for the most part, our operations in China are wholly owned subsidiaries. We've got a few places in the component area where we've done some joint ventures, the same on remanufacturing. But the vast majority of our operations in China are wholly owned.
There's been a lot of discussion that China's growth rate has slowed. I think that's the correct term, but it's still growing relatively fast. You're going to continue to push in that market. Has that changed your strategy at all?
Well, you know, for our industry, you know, we did see a slowdown in 2011 and in the early part of, you know, 2012. And I think if you look at the massive infusion of stimulus coming off of the 08-09 crisis, I think it's reasonable to assume that that was going to come to an end. And we've seen that slow, and we've seen that play back in our industry. But, you know, we look at the long-term fundamentals. You've got, you know, a huge population, the focus on urbanization, and as that urbanizing population happens, you know, you need water, road, housing, sewer, energy, all things that are what we do every day.
Just in case folks aren't familiar with Caterpillar, you guys make just a variety of things that are all yellow, large, heavy, and it's used to build construction for roads, bridges, infrastructure projects. These are very large equipment. How much of that equipment are you manufacturing in China, and how much of that is staying within China rather than being, say, exported out to other countries?
Yeah, you know, today we've got 25 facilities in China, north of 25. We have 3 under construction right now. We've got 4 design centers, 3 logistics centers. We finance about half of what we sell there. And the primary focus is built in China to serve China. Now, we do have the flexibility, as we see those ebbs and flows of the industry, to source out of China into other parts of the world. But the strategy itself is, how do we build out a business model in China to serve China?
Knowing what you know today as part of the senior management, is there anything that you would have done differently over the last year and a half with respect to doing business in China?
Over the last year and a half, I'm not sure. I think what I'd say about the last year and a half, as the industry's come off following, you know, the downturn, if you would, the fall off the stimulus, it's actually been leveraging the lessons that we've learned, you know, through, you know, the decades in other parts of the world. We do operate in cyclical industries. I always say there's only 2 constants in Caterpillar. Our markets move up and our markets move down, and it's how you manage through those cycles that matter. And I think that's what we're seeing in China today, the benefits of that systemic business model that allows you to take the ebbs and flows of that industry. So I guess I think what's happened in the last year and a half is leveraging what we've learned in other parts of the world, Brazil being an example. We went into Brazil more than 50 years ago. We're seeing some of as a country develops, as it goes through cycles, we're applying many of the principles that we learned in other parts of the world in China.